Hi, you're watching this very special interaction today where we focus on market outlook in 2025, and with me I have Swarup Mohanty from Mirae Asset. Hi and welcome to the show. In fact, talking about the year that is just almost about to end, you have achieved an AUM of more than 2 lakh crores. Your SIP book is somewhere around 857 crores, slightly more than that. If I have to ask you to sum up this entire year, or maybe last 2 years, what comes to your mind first?
So I think when you look at last 2 years, what was perceived to be a business of risk completely changed to a business of returns. And when you look at us as asset managers, we always bring the risk to the table. We are diversified in nature. And when you look at generating returns in the market in the last 2 years, a diversified strategy was now probably the best strategy. But over a period of time, the reason you come to mutual funds is a diversification of your money. Otherwise, you can go directly to the market. So players were like us were a little bit on back foot. Earlier, if you see what we used to discuss as being value stocks turned into growth, and the growth stocks look like value now. But towards the second half of the year, we see a lot of that changing. And then from here on, I think as the risks in the market have started unfolding, our balance sheets, our portfolios have started looking up in the market. So the way we look at 2025 can be very different from the way the last 2 years have been. So yes, very satisfactory to see 2 lakh crores of AUM. Would like to thank all investors and partners and all of you for getting us here. But the story starts from here on. We've created a good foundation for ourselves, and then how we behave, both in our fiduciary capacity and our fund management capacity, will define our journey from here. We are a good bunch of people now for sticking together for 16, 18 years. And we are ready for the task is what I'll do.
So what's going to be the differentiating factor now from an AMC perspective?
I think, Kavita, when you look at the underlying market is changing dramatically. I think if you took to any fund management unit, the basic number of stocks that are being added, especially in the mid and small, are giving fund managers this great ability to choose more. Add to that, the liquidity of the market has increased. When you look at the debt side of the market, with rate cuts now getting a reality, that side also looks great. And the fragility of the global data keeps commodity in the play. So from an investor perspective, he or she is spoiled for choice. It's the best time to be an investor. Similarly, it's a great time to be an asset manager. The opportunities everywhere. The equity market is beginning to look reasonable. Still not cheap, but much better than what it was 2 years ago, right? So I feel from here on, both as an asset manager as well as an investor, an asset allocator will win. Market timers will lose. So as a fund manager or asset manager, we'd like to be asset allocators and build business accordingly. Sorry, the voice is a little bad today.
No problem. Okay, so do you also see our investors getting matured? Because yes, we've been seeing high SIP numbers coming up every month, but the SIP stoppage number is still a concern. How would you like to look at it?
I think it's a factor of the composition of the SIP. If you look at the broad sales in the market for the last 2 years, it's completely skewed towards riskier assets, that is small cap, and towards the end a little bit towards theme. So those investors tend to be slightly more fluctuating than people who invest in the core assets. We just answered a question of us doing 2 lakhs without a small cap fund. And that's been my learning. The core assets stick longer, and the riskier assets are volatile by nature. That's the nature of investing. So when you have 40% of sales in small cap, it is natural that that book will be a little more turbulent than what it used to be earlier. And that's something which we are seeing. Plus, in the last 2 years, the focus has completely shifted to return generation. So I think that's something which we hope will change. Make no mistake, the young who are coming in are very smart. And that is why this change in SIP book, shift to financial assets is real. I mean, this time we saw the Gold Council putting up an ad on gold ETFs and not on jewelry. So there's a lot happening at the underlying. And before COVID, we were just 2.5 crore folios. Now we are adding 1 crore folio a year. So from here on, we will see a very different space in investing. I have this underlying belief that, you know, the young are seeking riskier assets. Right? And it's up to us to then come in and give a risk mitigated product to them. Otherwise, they will find other opportunities, which they are already. It's the only country where demat accounts are more than mutual fund accounts. And I think going forward, any wealth proposition without a stockbroking proposition is also not complete. The young will behave very differently, and as asset managers, we have to cater to them.
Would you advise them to taper down the expectation, return
Yeah.
expectation?
See, I wouldn't say taper down expectation, make them real.
Make them, okay, have realistic
The
expectation.
last 2 years have been
But
pretty
the
abnormal.
expectation continues, no? So how to make it realistic?
I think they read enough. They know what they're doing, right? But make it real. You enjoyed 2 great years. Fantastic. There's no reason why it need not extend also. I'm not in that camp who will predict. But make it realistic. But allocate prudently. There are opportunities everywhere. I am not also of the camp that if you've invested somewhere, get out and invest somewhere else. Your fresh money, realign. And opportunities are there. There are incredible fund managers in the industry, and take the journey with them.
One last question. What, according to you, will be the theme of 2025?
So I think across some very broad themes, and I'm in 2025 when you're asking people to mitigate their expectations, it's also to come back to the core, right? And the core themes of India, which is consumption, healthcare, banking. These are the core themes, not the exciting themes.
Yeah.
Probably are places where one can really look at opportunities. At the same time, because of the expansion of the market, earlier anybody would recommend a skewness towards large cap, but that is expanding towards the mid and small. So say the 60-30 proverbial breakup, 60-40 proverbial breakup of large versus mid and small can go to 50-50 because the number of good companies listing in the mid and small caps are only increasing. So some amount of portfolio alignment can be done. And that is what I would recommend rather than getting out of this and that. There would be a valid reason why somebody would have chosen a particular fund or a stock. That story would still remain intact, maybe a little bit of ups and downs. But your fresh money, you can rebalance in areas which have fresh opportunities.
Fresh opportunities. All right, and the takeaway is to have realistic expectation. Thank you so much for talking to us today. Thank you.
Thank you, Kavita. Wish you a very happy New Year.
To you too.
If you like this video, then like, share and subscribe to ET Now.